Wanja, Wang'ondu, who is the assistant manager of tax pay, right? You have quite a portfolio there at the Taxman, indeed in charge of taxpayer education and such. Thank you for making time.
Thank you.
Whenever we talk about KRA, what comes into mind is like, oh my God, they're after me, the taxes and such. So with this past year where we've had COVID-19 disruptions and such, from where you sit, taxpayer apathy, how has it been, especially where compliance is concerned? What was so unique about this year?
Now, with COVID-19, there are some incentives that the government introduced that were highly embraced in the market, like the turnover tax. The rate was reduced from 3% to 1%, and that is quite attractive to the small traders. In fact, the small traders said that is a good move. And even after the rates were reinstated for turnover tax, imagine it's still at 1%. That's a very good move for the small traders. Then we also had the reliefs that were in place for people who are in employment. I hope you noted the change this January. You know, last year in April, there was an increase in our salaries.
Yes, at around 5, 10, depending on how much you're making.
Yes.
We have missed it since January.
So you can see those incentives were a good way of cushioning the business persons, as well as the rates for taxes were reduced. Remember, the highest tax burden is always at 30%. But last year, it was actually at 25%. And then even for limited companies, the resident companies, it was at 25% instead of 30%. So that was a good move, and it helped the business persons cope fairly well with the prevailing conditions. And for this year, we are back to the rates that were there before. And what we have noted with business persons, they're actually welcoming the move. Like the turnover tax traders, they are way too happy with the 1%.
Still remaining at 1%.
Yes.
Now, talking about traders, and we're looking at a bunch of them, MSMEs and such, there have been quite a number whose businesses have not, gotten to pardon. How is, or rather, what are you doing as a taxman, as KRA, to ensure that you walk this journey with these traders? Because this, otherwise, if it was not for COVID, they would be operating. And there's been talk that even when I make losses, I still have to declare yet I'm making losses, yet I'm not operating. Then demystify that.
Now, you realize that last year, COVID hit us. There are other years that other pandemics would have hit as well. And so, being a year that COVID hit, we noted that not all are affected by COVID as well. In fact, there are some sectors that did extremely very well. There are some sectors that did extremely very well. And so what you're basically talking about now is, generally this year, there is a tax that has been introduced called minimum tax. And with this tax, it's basically saying that for people in business, they are either in the turnover tax regime, where they pay the 1% of the gross turnover, or they're in the income tax regime. So when we come to talk about the persons who are in the income tax, then we are saying there are a number who may not have been paying any taxes because all through the years, the declaration have been lost possession. And so you look at it this way. If the small trader is paying 1% of the gross sales, then are we now saying that for the large traders or for the others, if they're in lost possession, there's nothing they pay? And so an initiative now has come into place whereby we are saying, let all of us be in, let none of us be in a competitive advantage over the other. So let it be that the lowest tax payable by all of us who are in income tax regime to be 1% of our gross turnover. So that's what minimum tax is talking about. Yes. So you can see it's not as hard Yeah, let us be at a same playing ground. That is a small trader who is in the turnover tax, and for the others as well.
The others as well.
Yes.
Now, there's been talk about plans to widen the tax base and include those in the informal sector.
Yes.
Where are we at as now? Sorry.
Okay. So now you notice that turnover tax is a tax that is coming in to ensure that the people in the informal sector contribute something. So are you there and you are in informal sector? 1% of your gross turnover is expected from you every month. So like what you made in the month of January, a 1% of those sales, you're expected to pay that on or before the 20th of February. So this is a call to all persons who are in the informal sector. Government has information about you. Do not wait until a government official visits you and tells you you're expected to pay this, because the day is coming and we'll catch up with you. So,
why are you giving us goosebumps? It's a Thursday. Where are you giving us goosebumps? Thursdays are easy days. But
for
here
sure.
you're saying you're going to catch up with us?
I declare them easy days, and so it is a call to us. Let us not wait for the taxman to catch up with us. Let us save on the penalties and interest by coming up, taking the voluntary tax disclosure program that is in place. I believe Kenyans have heard about this voluntary tax disclosure program.
Yes, the one that was launched in 2015, right?
Yes. No, it's actually launched now, but it's saying that if you have taxes that you did not declare from July 2015 to June last year, you have a window to declare that. In fact, it's saying if you declare it today, that is the year 2021, you will get 100% waiver on all penalties and interest. So persons in informal sector and all Kenyans, come out in big numbers and let's take advantage of this voluntary tax disclosure program and declare all the incomes that we did not declare, because we will enjoy the 100% waiver on interest and penalties. I think that's a very good initiative.
Well, from where you sit as a taxman, it appears to be good. But now there are people, especially a section of legislators, have been arguing as early as beginning of this week, saying that such incentives that are making KRA not meet its target should be scrapped, so that you rake in the monies that are required to support recurrent as well as development expenditure. And here you are, you're saying that this is a good move. With people, critics such as such, where would you, where are they coming from? Do you understand from where they're coming from in regard to this, 100% waiver on penalties, from taxes undeclared from 2015? That's quite a sum of money we are missing out on.
It is a sum of money that we are indeed missing out on. But again, we have talked about the nation or the government being at the interest of its people. That 100% waiver, there's somebody there who has so much undeclared incomes and who has been waiting for a moment that they would be able to get a widow to do the declaration. So, my fellow Kenyans, before the window closes, take advantage of it very fast. This is the time to take advantage of it, because laws can change. And so, for now that we are certain, if you do the declaration, you will get the 100% waiver on the penalties and interest. Please take it up very fast, and you will enjoy this waiver on interest and penalty. So, for me, it's a call to the Kenyans. I feel it's a good thing for that person who has that income, and it was not declared when it was supposed to.
Now, what plan? I mean, I'm sure you have a plan B when A fails.
Yes.
We are in the financial year 2020-2021 that comes to a close in June.
Yes.
That's very close, actually. So in the event that we do not meet our targets, and I'm saying KRA.
Yes.
Options that you're ready to explore.
Oh, wow. Let me note one thing. By the way, we have two main departments. That is the Customs Department and the Domestic Taxes Department. From the Customs Department, they have been surpassing their targets. which is a very good move. Now, domestic taxes is where we have not yet surpassed our targets, but we are working very hard, and we know with April, we know that April is a major deadline or a due date for the balance of tax for last year. So it's a call to all Kenyans. The taxes that we did not pay last year, we have up to the 30th of April to pay that. So, do you have any taxes that you did not pay last year?
No, my
years was paid.
You're not coming after me. I'm not in that bracket. You're telling very subtle. We will catch up with you. Man, that's a threat. Is it a threat or a promise? Or it's a fact?
I think it's a good, it's a good, we need to get the facts right, yeah? So, let us ensure any balance of tax that we did not pay last year, we settle it on or before the 30th of April. So from where I sit, this is a very promising year. And if all Kenyans paid the balance of tax, I assure you, we will be good to go. So,
now, Madam Wanja, we've been having last-minute filing of tax.
Yes.
I don't know it's because we are inherently last-minute people, but what have you done to ensure that, this system, as you've said, we have up until April, that I can still continue progressively filing for my taxes so that we avoid that backlog, last-minute backlog?
So, to my dear Kenyans, filing of returns is open. Let us not wait for the last day. The law gives us a window of 6 months to do the declaration. And this opens from 1st of January to 30th June. And what do we need for us to be able to file? For persons whose income is purely from employment, all you need is the P9 that is given by your employer. And my check with employers in Kenya, they have already given the P9s. So we have the P9s with us. For the persons in business, what we need is, if it is a sole proprietor business, simple accounts. And then if it is a limited company, then we have the accounts. So with this, then we look at our other sources of income. Maybe you're here and you have farming income. So you need to prepare accounts, simple accounts from your farming.
Farming?
Yes.
You want me to prepare my income where, kuna kuku wawili watatu, I sell it to my neighbor. Really?
Now, let's talk about that.
Yes, actually, let's talk about that.
Yes.
We've been having talks about, civil servants not being engaging in other acts. But let's be very honest. Everyone has a side hustle, especially those who are in formal employment. So now, these are us who you're telling that we need to pay our taxes. We are not ready to formalize our side hustles. How do we go about it? How do you convince me that I need to tell you that I sold my chicken to Mr. Ben here?
Okay, so when we are filing our income tax individual returns, we are required to declare our incomes. That is, our income from employment, our income from our side hustles. And these side hustles may come in a number of forms. It
like
would be business income. It would be, though they are formal, I know for people whom we are in formal employment, we tend to say all our other incomes are side hustles. But let me state today that when we are filing our income tax returns, we need to declare from employment, from business. And you know what business is? Business means the normal trading that we are aware of, the normal selling and buying, professional income. It would also mean adventure. Are we doing something out of fun?
Like my chicken, I had fun. So if I sold my chicken today,
now
and
that
they
is
died
at
the
the
following month, what happens? And I don't want to do chicken anymore.
That is falling under farming income.
Okay.
Now, for people who are in farming income, the law goes further to say there are two types of farming income. There's the person who is doing farming income purely for food in the family. So the law specifies and says, if 25%, if we are consuming more than 25% from our farming income, then that's hobby farming. That's not taxable. So the 2 chicken, if they are truly 2,
can be 2 times 6, 2 times 10, 2. There's a 2 somewhere.
There's a 2 somewhere.
There's a 2 somewhere.
So now let's then apply what the law says. Are you using for your home use 25% or more? Then that's not taxable. That is the bottom line. So now look at it. See what you're getting from farming. If 25% or more is for your home use, that's not taxable. Yeah. Then there are these other persons whom we are in commercial farming. Commercial farming is taxable. And so we need to declare that. Then there's the aspect of, we have talked about the businesses.
Yes.
We have talked about investments. Now, for investments, they're the investments that would be bringing us interest income. Now, for individuals, the interest income that we get attracts 15% withholding tax. That's final. So we will not be required to declare it again. Then there are the dividends. There's the dividends that we get from SACCOs. Those ones we do not need to declare them because they attract a withholding tax, which is final. Yes. But for the others, limited companies, when you earn dividend income, you need to declare it. Then now, we move on to rental income. Rental income.
Oh, yes.
Yes. And I know most of the persons who are in formal employment are actually earning some rental income somewhere because we have managed to put up a household too and we have a tenant. That is the case.
I'm only aware of my chicken. But please
now let me remind you about that one as well.
We will see. When you say rental income, I think we also need to specify. We're not just saying just a structure. You know, when you say rental, people see flats. Yes. We're also talking about these containers that are used for commercial use. You have a shop somewhere. That is still rental income.
It is. In fact, to go a step further, would be your plot, you've lent it out to somebody who is maybe doing business there or who has elected the masts that we know of, communication lines, Kenya Power, and all those. In fact, you are a property owner who is earning rental income. It doesn't matter whether there is a building on it or not. Yes, so now we get there. The people who are in rental income, we have 2 regimes in Kenya for charging tax on rental income. There's the one that people pay, the houses are residential, and this person is in the monthly tax regime. The person pays a 10% of the gross rent they receive every month. Those ones, once they pay every month, it's a final tax. They close the books and move on to the next month because they finished with the tax month. But for the ones who have the commercial properties or who earn the commercial rent, they declare now. I know they pay in the course of the year, but the declaration is in the annual returns. So that rental income needs to be declared now when we are declaring our other incomes. So notice this. If your rental income is the one that you pay 10% every month, no other declaration is required from you. But if your case is where your residential rental income is more than 15 million and last year was more than 10 million, or yours was commercial properties, you are in the annual regime and you need now to declare as you declare your other incomes under the income tax regime. Because filing is once in a year, but paying of taxes, the installment part applies. And that's why I'm saying 30th of April becomes a due date for looking into our taxes for last year that we did not pay. Remember, under income tax, the law gives us the window of paying in installments throughout the year. And then come the end of the year, we prepare our accounts. And we now know that the taxes that I was supposed to pay in the year 2020 was 1 million. But I ended up paying 800,000. in installments. So that 1 million less the 800,000 gives me the 200,000, which is the balance of tax, and which I'm calling upon all Kenyans to remit or to pay this balance of tax on or before the 30th of April. So realize this, the returns are due on or before the 30th of June for individuals and partnerships. But the balance of tax ought to be paid on or before the 30th of April. I've noted a few persons who come in June and they want to file the return and pay the balance of tax as well. So note, balance of tax is on or before the 30th of April. And then the returns is on or before the 30th of June. And for companies, as you are aware, there are very many companies that their year end on that 1st December. So in your case also, your balance of tax is due on or before the 30th of April, and your returns are expected on or before the 30th of June. But for the other companies that the year end is not that 1st December, remember that your balance of tax is expected 4 months after the end of your accounting year, and the returns 6 months on or before 6 months after the end of the accounting year. So I hope that clarifies where we belong and when we should be paying the balance of tax and when we should be filing the returns as well.
Now, there's quite, matters of tax are not, it's like legal jargon. Most people do not understand whenever they hear, and that's why we have taxpayer apathy, people finding all manner of ways not to comply. So we have an open forum. This is a live broadcast, and we receive, feedback regard to several matters that you're, and I'd want to read one, and I don't know how to go about it. This is a feed. You'll understand this is matters of tax.
Yes.
So this is about what you are required to pay in as far as installment tax payable on March 20th, with the minimum tax computed at a rate of 1% on the turnover for the month of January to February 21, and to remit the higher of the two. I think this is a clarification in regard to, looking at MSMEs as well as, issues of tax compliance when it comes to various companies as such. And we're looking at matters of businesses that incurred losses or rather projected losses for the year. What happens, especially let's look at the entertainment sector. What happens in this regard?
Okay, well, thank you for this question. So, number one, that small trader is out of this picture. Because the small trader, we said, you are at 1% of sales, and that is it. You don't belong to the income tax regime. Now, we move now to this one who is in the income tax, who has income tax obligation. The person is trading, and the person made losses
in the media services sector. You're looking at the media services sector.
So this person made losses. Last year. So since they made losses last year, and we know installment taxes we project from the previous year's profit. So
let's put that in layman's terms. So I asking the question. I ran Regina Manyara Media Services. So last year I made losses of almost $1 million. But the previous years I had made an income of 2 million shillings.
So now you made a loss last year. We always project from the prior years. So when we are looking at the installment taxes that you are supposed to pay for 2021, we project from your profit for 2020. And you have made it very clear there were no profits in the year 20. So now, we assume your year ends in December so that we do that computation in a way? Fine.
Now, to ask the director to do, we are doing math, so us taking a break while we're doing math, we might actually lose the train of thought. But they're suggesting, because that's quite heavy mathematics, we take a short breather, Madam Wanja. We'll be right back to do the computing of that particular installment tax.
fanya hivi, wewe teremuka tu chini. Hata watu wanangojea, unasema unione, si ninakuona ndio huyu kucha. Kucha ninakuona.
Yoi.
Nimekuita mara ngapi Kate? This is the Nissan Note.
Hii ndio motoka.
Not that this is the Nissan Note we are giving out.
Na ni rahisi sana kuwekelea bid. Unaenda kwenye lipa na M-Pesa. Unaweka paybill number 4032353. Kisha unakelea account number ya Nissan Note ni Note, N-O-T-E. Namba ambayo unapenda, labda unapenda 100, labda unapenda 200. Wekelea Note 100, Note 200. Alafu tutakuitisha shilingi 40 peke yake, 40 bob only. Weka pin yako, utakuwa umekelea bid ya hii Nissan Note. Inakungoja wewe mahali popote ulipo. Mimi na mtumishi tutakupea.
Tonight on KBC Channel 1.
Miradi ya utoaji maji safi kote nchini ni muhimu katika kuimarisha maisha na mapato ya Wakenya. Mradi wa bwawa la Thwake ni mojawapo ya miradi iliyoanzishwa chini ya uongozi wa Rais Uhuru Kenyatta kwa manufaa ya wananchi. Wiki hii kwenye Project 254,
hiyo maji mahali tunapata kwa kwenda hiyo kilomita, saa ingine tunakutana na hii mnyama inakaa kwa maji, crocodile.
Katika project ya Thwake tunazo tunnel mbili. Wakati ujenzi, tunnel hizi zitatumika kubadilisha mkondo wa mto.
Hiyo stima itasaidia kwa sababu kama stima itatoka hapa kwa wingi, hakuna mahali patakuwa hapana stima.
This weekend on KBC Channel 1.
You are not my mother, neither are you my woman. Sawa sawa.
Yes, Julia umesikia? You are not his mother or his woman, so keep on.
Ati men are supposed to be the head of the family, please.
Chabo.
If these are the leaders of tomorrow, then we actually do.
Hey, come on! This can't be our routine.
I have to tell you something.
Fine, you can tell me when you're seated.
Kinanjui, what have you done?
She's here. Can you help out here?
Classmates, every Saturday on KBC.
Wewe ni mwanamme, sio mwanamke. Nini washikashika tu wenyewe?
Pilipili inayokwasha wailiani.
Sasa wewe na sura yako pia inapigwa selfie.
Umeona nani akipiga selfie? Niko natafuta naitwa huku.
Huyu nani huyu ana jina? Yuaitwa Fauzia binti Mohamed na anasema tena panguza hayo maji.
Juu ukipanguza haiwezi kauka, ndio?
Maji ya panguzo. Alafu mkuje kwa ofisi ASAP. Umesikia Fasia?
Fauzia.
Whatever man.
Thank you for still keeping us company. You're watching Good Morning Kenya. And this morning we're talking about taxes. Yes, you heard that right. So if you have a chicken business on the side where you do not consume 25% of what you produce, my friend, you need to file your taxes. You and I included. But I said to our guest this morning, who is Wanja Wang'ondu, who is the Assistant Manager of Taxpayers, saying, you know, and SMEs and in charge of education and taxpayer as well, I said there were only 2 chicken. 2 times what is the question? So you're talking about payment of installments, especially if the business declared losses. Then if they had projected losses or declared losses, then why should they also be paying taxes at this point? You were elaborating that. You were looking at a business that has made a loss in the financial year 2020-2021 of $1 million shillings.
Yes.
But in the previous financial year 2019-2020, they made profits of around 2 million shillings. We were computing the math.
Thank you. So we have said that when we are projecting the installment taxes payable, the base is the year that has just ended. So the installment taxes payable for the year 2021 will be projected on the taxable profits or the tax payable for the year 2020. Now, we will look at the two scenarios, an entity that made profit and an entity that made a loss. An entity that made a profit, we will basically, let's assume the tax payable by that entity was 100,000. We will basically glow that with a 10%. And so, the tax payable for the year 2021, we will take it to be a 10% to 100,000. That will be now 110,000. So the 110,000 now, we will divide it into 4. And once we divide it into 4, then we will get the first installment being a quarter of the 110,000. The second installment being a quarter, the third installment being a quarter, and the fourth installment as well being a quarter. That's close to 27,500.
Yes.
So that is an entity that's making profit. Now, a step further, minimum tax. So minimum tax is coming in to say, we have assumed that this is a person that year ends 31st December.
Yes.
And so the first installment is due on or before the 20th of April. So for the first quarter, we have seen that the installment tax projected to be paid is 27,500. Yes. We will now compare with minimum tax, which is 1% of the gross turnover for the first 3 months of the year. You get it?
Yes.
So give me a figure for the sales for the first 3 months.
If you're looking at how business has been performing,
Yes.
let's give this is a person who made a profit of 100 when things were not so good. So we're looking at around 70.
Okay.
Yes.
So 70 every month sales.
Yes.
So if it's 3 months, let's assume it's still the same 70.
Yes.
Okay, to simplify our computations, let's assume 100,000.
Yes, 100.
100 for 3 months, that's 300,000.
Yes.
So what is 1% of 300,000? That gives us 3,000.
3,000.
So on or before the 20th of April, what will be paid is the higher of the two. The projected installment tax, which we found out to be 27,500, all the 3,000, which is the minimum tax. So in this case, what will be payable will be the installment tax. That's clear.
Yes.
Now, let's now move to the other scenario that you said it was losses.
Yes, I made losses.
So if you made losses, then that's a 0. So the projected profit is a 0 because it was a loss. So if you glow a 0, it's still a 0.
Yes.
So there is no installment tax payable. So come
minimum tax.
Yes. So now
I wonder if Doreen, Ben, as well as Martin, who happen to be part of the crew here, are understanding the math here. I wonder if they're understanding. I hope they are understanding.
From the comfort I see, the calmness from their faces, it shows they're getting it.
You may be surprised. They may be floating, but here we are. We are here to make sure they understand. Yes.
Sure. So now, that means there is no installment tax payable by this person.
Yes, because it was projected 0.
Yes.
0 by 0 is 0.
Yes.
Anything, let's make it simple. Anything you multiply by 0 is 0.
Exactly.
So we are 0.
Thank you.
So no installment.
But now, the minimum tax, having said that the sales of the person is 300,000,
yes,
is the 3,000.
Yes.
So come on or before the 20th of April, the person will pay the 3,000.
The 3,000 because it's the highest.
Yes.
Now, 3,000 and
0. It's the 3,000 that's higher. So that is how now the operations are being done in the year 2021. Because in the course of the year, we are required to pay our installment taxes. And now with the minimum tax coming in, it's basically saying it's the higher of the two. If the higher is minimum
tax, the installment tax or the minimum tax, depending on the performance of the business.
You got it.
Both.
I
got it. Doreen, did you get it? We will ask her when she comes back. I don't know if Martin got it or even Ben. Let's just go there because Ben buys my chicken, and I've been told we need to declare that as our earnings from that. But hey, we might as well consume the 25%, right? Now we've been talking about issues of tenders and such. You've heard people walking by organizations, praying, getting their tenders and such. this brings to the question, because we've had these people who've been probed, or during this probe, there's a conversation that is coming up. I registered my business in anticipation of landing a tender. What if it never comes to fruition? Will you as a taxman come after me, yet I just registered a business, you know, to just in anticipation? What happens in that case? If I never land a tender in a year, in a financial year, what happens?
One of the things that the taxman is out to do is to ensure we simplify our processes, our laws, our information. So I want us to look into this in a very simplified way. So this person, today, the mode of registering a business name, a limited company, a partnership, is through the eCitizen platform.
Yes.
When we log into eCitizen platform, the output will be the certificate of registration for our business. Then, if it is a partnership or a limited company, there will be, in addition to the certificate of registration, a PIN number. Then, when we are registering this entity on eCitizen, there are 2 questions that we will be asked. We will be asked if we have employees who are earning more than the 24,000. If we say yes and say the number, on top of the certificate of registration and the PIN certificate, we will automatically get a pay-as-you-earn obligation. And then the system will also ask us if our expected turnover is 5 million or more. When we say yes, we will automatically get the value-added tax obligation. And then in addition to that, we will get an NHIF number and an NSSF number. This is ease of doing business, because we know that when you are registering, you are going into business. We don't want you again to move back to our offices saying, I need a PIN, back to our offices saying, I need a pay-as-you-earn obligation because I have employees. I need value-added tax because I'm trading in fattable goods.
But what happens if I'm registering a sole proprietorship? Like, for example, in the services industry, and we're talking about consultancy and media production as such, because you've seen this is very rife among the entertainment industry right now. I'm picking a disc jockey or what you call a DJ. It's a sole proprietorship. I am the business. What happens? I have no employees. I am the employee.
If you are just registering a business name, business name do not get an independent PIN. So all the business, if you register business name under your name, you will just get the business name from eCitizen. And then your individual PIN number is what you will use in your business. So that would mean you will be required to add the pay-as-you-earn obligation as well as the value-added tax obligation when you are required to do that. So now, my urge to all Kenyans is this. If you are registering a business and you are not starting that business, please ensure you give the correct information. Because if you are not having the employees now, and you're not expecting the employees tomorrow, then don't indicate you have the employees. Because if you indicate you have them and you don't have them, the system will automatically give you the pay-as-you-earn obligation. And once you get the pay-as-you-earn obligation, you're required to file the returns every month and declare what you have paid the employees and limit the tax that you have deducted from your employees. Also, for the value-added tax, the question that eCitizen will ask you is, are you expecting to do business with a turnover of 5 million or more? Remember, you are getting the PIN that day. So if yours is something that you are not to do business, but you have just registered waiting that you'll start your business next year, don't select that you're expecting that turnover. Because you see, in taxes, we talk about the year of income. So the turnover, are you expecting that turnover this year? If you're not, don't select that obligation now. Then when you will start that business, and now you'll be expecting this turnover, it will be a requirement for you to have that obligation. So note, don't just pick an obligation now because you have seen there's an obligation. Understand it. And that's why we have put that pop-up message on eCitizen to ensure that before you select, you understand what the obligation is all about. But once you get the certificate of incorporation, you will get the PIN number. And the compulsory obligation for non-individual entities is either turnover tax if you select it, if you will be operating your business and you're expecting a turnover of between 1 million to 50 million, or income tax. So what we are saying, if you are in the turnover tax regime, your returns are expected every month. So your sales for January or your tradings for January, you are required to declare that on or before the 20th of February. Then, if you're in the income tax regime, that's what we are talking about, filing the returns every month, every year. That one is every year. And the payment of the taxes through the installments. And then this is where we were coming in and weighing the installment tax versus the minimum tax. I hope that's clear now.
I hope it is clear, especially for our viewers. We have been talking to Wanja, who is the Assistant Manager, Taxpayer Services, and also in charge of taxpayer education, targeting MSMEs, including you and I. You have had that information. You can get further information from the Kenya Revenue Authority website, as well as KBC website, where we have been streaming live, and we'll be keeping you up to date. Remember, this is just around the corner. Kulipa ushuru ni kujitegemea. I hope